Welcome to the Swing Trading with Cycles channel. We're going to do our update on natural gas today. It's February 20th, 2023. It's a Monday, President's Day. So broader markets are closed, but futures did trade. We have closed trading. We made a new low. So that's 2.175. And I want to talk really quickly about potential, cost of production. There were some questions in the comments, and as prices go lower and lower, that always becomes a question. We'll talk about that really quickly. We'll spend most of our time here looking at the longer term charts, the weekly and monthly, to understand what levels might we be approaching, and really just try to understand also the seasonal picture. We've talked about this in previous videos. As we get on in the year, when should we expect more of a bounce? And especially as we look at the monthly chart, what seems kind of logical, right? And so, as always, if you're new, welcome. Take a look at the pinned comment to get a sense of some background, previous videos, also some important reference materials like how to understand cycles analysis, what is a swing high, what's a swing low, how to detect them in real time, use them in your trading, use them for risk management, because that's what this channel is all about, risk management. So as we talk about the price of production, I asked everybody's favorite chat bot, what is the cost of production for natural gas? We know this thing only goes through 2021, so this isn't going to give us the current cost, but it gives us here the cost by basin. And some of these basins do just natural gas itself. Others, natural gas is a byproduct of like oil and other things. And so you can see here, obviously these numbers are out of date, but the point here is that the cheapest thing, the lowest cost of production here is $1.55, and the highest is around $4. So obviously quite a bit of dispersion depending on the basin, depending on the company. And you can see that triangulates with these numbers here. Source here is a Bloomberg Energy America Fact Book. That's from 2019. So again, these prices are old, but things obviously haven't changed a ton. It's not like these prices have been cut in half. So you can see here the lowest is 164. The point though is that we're getting into that area where, for some places we're probably at the price of production, maybe lower. But the point is to focus on the trend. Don't get so caught up in, oh, well, it can never go to this price. When it was up here, when we started these videos on this channel at $6.70, many people didn't think it was going to get down to 360, which was my original base case, right? That was this set of pivots here. And of course, we got there, consolidated a little bit, and then dropped to the next level, the next logical target. And now we're potentially seeking out another target. Again, we're obviously a whisper away from $2, so that's a psychological level. But let's thinking about this from a cycles perspective. We talked about like the most bearish scenario here is that this is actually a new daily cycle, and we're just declining into a daily cycle low now, and it's only day 10. We have our top on day 3. That's like the most bearish scenario. Of course, let's see if that plays out. If we were to get a cycle, let's say that was around 25 days, just call it ballpark, one scenario, that gives us a low around March 14th. And potentially that low is also a weekly cycle low. So again, we look at the weekly chart and we can see, I'll get rid of that line. You can see, again, I said we traded today. And so that's what this candle is here. This little doji candle that has made a lower low. That's today's candle. And again, keep in mind, we didn't open as an inside candle the way we had been these past weeks. Like these weeks made lower lows, but they at least opened inside first. This just opened below the low just immediately. Now, what this does is it sets up the bullish case is that this becomes a false breakdown, right? So we've made a lower low below this candle. That's our new low at 2.175. So we potentially make a higher high above this candle at so that level is 2.623. So what is that in terms of percentages? Just to give some context there. Okay, that's a nice little move. That's like 15%. And obviously Boyle would give you a bigger move since that's what it's designed to do. Now, the problem is we kind of gave back the gains today, or the gains that happened today earlier, and we'll look at lower time frame really quickly. But this is still a green candle. And that's the point. When it makes a lower low and then goes green, that's your potential bullish outside candle. In the same way that if it makes a higher high and then goes red, that's your potential bearish outside candle, which, I think we had one of those. Well, this was almost a bearish outside candle. So if we think about the level that we sort of stopped at, though, it was kind of interesting, right? It's right around here. which is, we stopped right around here, right? Isn't that interesting? And that makes sense. So you can see this is an area where, and let's zoom in here. And as I say, this is all about trend analysis, and we have to understand, and candles are just a visual representation of a price range, right? And so it's important to see those periods in the past where a rally stopped, or I should say, right, like a rally topped out and then you had a decline, and where did the decline stop? So you can see this was a weekly cycle low, from the past. That was in March 2021, right? We had this little feeble rally and then we had this decline, but it stopped here, and you can see it started a nice long rally. So the low there was 2.422, and we had talked about how 240 was sort of a magnet many weeks ago. Once it seemed clear we were consolidating beneath 360, so making another leg down. And so now we've just come down to this pivot, which was another important point. Like, I think that's the way that you want to think about this. I mean, I'll just if I draw this to make it clear, you had this rally and then you had this decline, right? So you're looking at the point where prices didn't go any lower, right? Once they got here, they bounced, right? Buyers stepped in or sellers got exhausted, some combination of the two, but price found some kind of quote unquote support, if you want to call it that. So this next level down is where this candle here was 2.238. And the point here is that these aren't exact levels, they're zones. It's areas where price aggregated in the past where it was important. And so, to my mind, like the way we're working our way down, what's the next rally that the next sort of significant rally and retrace? This and then that, right? So what is the low on this candle? It's $1.80. To be 1.795 to be exact. Doesn't mean we have to go there to the tick, but that tells you, if we can't hold these levels that we're at here, where we're hovering above $2, we're clearly potentially heading to 180. And the point there is, once we get down to this level, you would imagine that, or I should say this zone, you would imagine that there's going to be some reaction from price. Again, we've seen it again and again. Once we got down to 360, price reacted, it consolidated. That's your 360 pivot, right? It consolidated, it waited there, it just kind of, and then it dumped lower, right? And so now we're at this next cluster, and you imagine, are we going to come down to this cluster? Do we get down to this cluster? It doesn't mean we are going down there as a guarantee, but it becomes a clear level that you want to watch on the way down. And in the context of cycles, this is potentially week 16. The last cycle was really short at 16 weeks as well. Everything is pointing, and going back to the daily cycle, the other scenario, I said the bearish scenario is that this is a new daily cycle. Potentially we get a bottom around mid-March if we have a 25-day cycle. It's also possible that, and I'll get rid of this now so it's easier to see, it's also possible that this is still all one big daily cycle, and we're going to get our bottom, like this would be day 50, and we're going to get our bottom like day 52, 55, who knows? So you always have to understand the bull and the bear case. And so if we think about the monthly chart, and we talked about this seasonality, I'll pull that up here. So as we said in the previous videos, this is seasonality for UNG. So you see a 73% win rate for April, and the other notable month is August. Again, notice December is usually not a good month. Neither is February. We're obviously seeing that. Neither is January. We saw that. And so and again, it's the price action is the key, but this is a good piece of context. This is over the last 16 years. Let's look at KOLD, which was, and I posted this on Twitter. Definitely take a look at the link in the description if you're not following. So this is over the last 11 years. Can we get rid of some of this? Yeah, we'll get rid of all of the qualifiers. And let's just make sure we're opening this all the way. Yeah, so I guess it only goes back 11 years. And you can see it's the exact opposite, exactly what you would expect. The best month is December, which was one of the worst months for Boyle. Look at the win rate in April, 18%. Win rate in August. And again, KOLD is an inverse of Boyle, so when natural gas is going down, this thing is going up. You can notice, March isn't even amazing, right? It's really December that's the standout. And then again, you have sort of June. But really, Thinking about the direction of natural gas, clearly April and August are important months, sort of seasonally. And so, if we think about what that would mean, of course, this is your February candle. Let's say the March candle is something middling. And again, also remember, we have these three pretty aggressive red candles in a row. So let's say March gives us another lower low, so something like that. You could see a world where we even have, something like this. And here I'm talking about the direction of the candles, not necessarily the color. But if you think about this, we could see a world where we get another red month for March. So that's 4 red months in a row. And then we get a green month in April. Maybe it doesn't make a higher high, right? Like this is optimistic, right? But imagine, like even actually if it makes a lower low, all that would matter is that it closes green, because that checks your box. Like, maybe it even does this, but it's green, right? Imagine that. That would check your box for a lower high, because you're not, like, at some point, even in a really massive downtrend, you're going to have 1 or 2 green candles just interspersed. Like, look at this on this way down. You had these green candles. I mean, this was a massive move down, but even then you had this big green candle. I mean, this is actually a perfect example. I mean, this was a very bullish looking candle, made a higher high, took out the lows of this, took out this swing high, and almost took this swing high out. And of course, you can see it led to a big lower low. So that would be perfectly, look at this, you can see it. There's a green candle there. There's always the lone green candle, or maybe even 2 green candles in a really massive downtrend that gives folks hope. So that could be a chance to make money, obviously, in a moment. Green just means it closes higher than it opens. And obviously, if we have a big upper wick, you could lose a lot of those gains. So one needs to be very nimble. But you could imagine a world where we get that green candle, and then maybe we get, more red in, May, June. And then this thing comes back to life in August, right? Where we have this horrible win rate for KOLD, which is the inverse, and a really good win rate for UNG, which is, the thing that we're tracking, obviously, or which tracks natural gas pretty closely, obviously. And so that's what you want to be prepared for as you kind of sort of zoom out. But you can also see, just thinking about like this huge rally up, we've almost given the whole thing back. That's the way that you want to think about this. This rally started here and it ended here. So now the question is, where does the retracement end? Like this is obviously your big last line of defense at 1.44. And I know people in the comments, there's no way natural gas can get down to that price. Who knows? We are in a downtrend is the point. And that is a clear and present pivot that is calling out to us. But before we get down there, you can see this cluster. Again, this is that same cluster that was on the weekly chart. This is obviously a monthly chart. So that's like that 180-ish area. Price certainly looks like it wants to test that area, just like it looked like it wanted to test this, and it did, and test this cluster, and it is right as we speak. If we see more downside, this becomes a logical target. It's one of those things where it's like, okay, if the next leg is getting started, this is maybe your area to take profits if one is trying to be short, for instance. But again, that little lone green candle would not be surprising in the least, not even in the least. And so obviously Boyle and UNG are making all-time lows, and so there aren't really, obvious pivots that they're seeking out. And of course, you'll have to watch for a reverse split. But we'll close out with looking at LNG, which is Cheniere Energy. It's a big natural gas company, if you will. This is the monthly chart, and you can see this uptrend has been astounding. How many months is that? So this thing has rallied for 32 months. And so by comparison, natural gas actually rallied 26 months. So that was a pretty healthy rally as well. But notice, again, think of like that's how you want to start training your mind's eye. You see this big rally up. Natural gas is basically almost given back its whole rally. This is nowhere near that. I mean, we're talking about nowhere near that. The low here is $27, whereas natural gas's low is $1.44, right? Now, so at some point, though, we're going to get a bigger pullback here, and that may have started in November. That's what this, because we have a swing high on the board. That's what this line is here. And this is interesting because this thing reports on Thursday. And so it's going to tell us something about its future direction. So far, the monthly chart is just red, or excuse me, just an inside month, but it is red. And if we look at the weekly time frame, that's where it gets most interesting. Now, again, look at this monthly chart, massive uptrend. Look at how clean this uptrend is. We do have a few red candles in between. So the same way we have green candles on the way down, you'll have your little red candles on the way up as well. But this has been a relentless uptrend that is probably now facing its big test. And when we look at the weekly, we can see that in more detail. This is that uptrend, right? This is the weekly time frame of that uptrend, and you can see these cycles within the weekly time frame. So you have this one. So from from swing low to swing low, that's arrow to arrow. So from this swing low to this swing low. So you have this rally that goes from this arrow to this one, and then we have this little decline. Look how shallow the declines are, right? They're like little baby shallow declines. Then you have this massive rally, tiny little really consolidation sideways, then another up leg, little move down, very gentle, up leg, little move down, very gentle, up leg. This is less gentle, right? So what was the percentage decline on this? So from this Pico top to here is 25%. So that is much more, and it lasted much longer. So another way of saying that is these have been very right translated cycles where the rally lasted much longer than the decline, and the decline was fairly shallow. And this is 1 cycle, 2 cycles, 3 cycles, 4. This is the 5th one that just ended, it would seem, at the beginning of January. And so a way of thinking about that is that's 5 weekly cycles within this longer term cycle. And so it makes sense after 4 really strong cycles, you get a weaker one. That's the 5th one. And what does this look like to you? A potentially even weaker cycle that just started. Again, this was your low. So that was week 1. This is week 2, week 3, week 4, week 5, week 6 just started. And notice, we just made a lower low on the weekly chart this past week. Again, this thing reports earnings this coming week, or this Thursday. So it's going to be really interesting here. We're on week 6. That would mean that our high came on week 1, which is very rare for something like that to happen. So it's very possible that we could make a higher high, some kind of double, or even double top kind of situation, and then come down. But this is screaming something like this, especially as you imagine natural gas continues to fall. So we have a little uptrend, right? We have a little uptrend. Then it starts to stall out. Then it's like, uh-oh, that's a higher low, or excuse me, a lower high. So the expectation would be at some point we do something like this, and then possibly that, and then that. And again, think about the fact that this thing has rallied for 4 really strong weekly cycles, 31 months of rally, almost 3 full years. Wouldn't be crazy for this thing to decline for several months, even from here. And so if you think about the daily cycle, and I tweeted about this a couple, it was back on day 9. So I'll get rid of these lines. So the high for the daily cycle came on January 13th, and I tweeted about it on January 18th, where it's like, oh, we have a swing high here from this candle. This was inside, and you can see that's what these lines are. All of this price action has been inside the range of this big down candle that caused a swing high for this day 7. And so again, thinking about cycles, this rallied for 7 days, and then it just went sideways to lower for 23 days, because this is day 30. And I expected a low on around day 33, and you can see I had the arrow down here because my expectation was we'd be down here already. So in a way, this has actually held up quite a bit. And now it's going to be really telling how earnings turn out, because that's going to tell you the rubber hits the road. We're going to get some kind of violent reaction, and this is positioned for a move lower. Now, that also means if somehow there's a bullish interpretation, we could get a rocket ship up. So it becomes very binary. Either way, one can make money once you want to position oneself on the side of it. Now, think about that. If we were to reclaim above this range, that becomes a potential false breakdown. That's how you want to think about this, right? Like this little move down is your false breakdown. below all these lows, and this thing could be off to the races. But again, if you think about the probabilities, you think about the higher time frame, you would think that we're actually moving into a bigger decline that may last a few months. So this is a good derivative to look at. Again, big natural gas producer, obviously not exactly following the price because it has continued to rally even while natural gas was just crapping. But interesting that it may be getting its big pullback that everyone was looking for. Now, and if it doesn't, it'll be a great long opportunity and obviously a lot less risky and more stable than natural gas itself. So that's the update for today on natural gas. We'll continue to update on Twitter for the smaller updates and do videos as it makes sense. Thanks for watching.